Good morning, everybody. It's Danielle Ronan with Keller Williams Realty. It is Tuesday, April 7th, in case many of you have forgotten. I know I have, losing track of the days. This morning, I do have the absolute pleasure of speaking with attorney Ron Bellenot, Monroe Attorney. Good morning, Ron. How are you?
Good morning, Danielle and everyone else.
And everyone else. And thank you so much. I especially wanted to have this conversation with you and share it with as many people as possible, because today we're going to be talking a little bit about loss of income and how people manage their mortgage. So give us a little bit of a background on exactly, from a legal perspective, what you specialize in.
Sure. Again, my name's Ron Bellenot, and I'm a founding partner of the law offices of Bellenot and Buford. This is our 30th year anniversary.
Wow.
So we've been doing this for a while. We started in Monroe. We're in Monroe right now. We do a number of things in the office, but what I'm here to talk about today, and I've been doing for the 30 years, is helping people who have financial issues, especially relating to mortgages and saving their homes, or sometimes it's not possible or practical to save the home, helping them transition out in a way that within a very short time they can repurchase again. Those are the kind of things that I have been doing for the last 30 years.
Okay, and me being a real estate professional, I've been in touch with almost every client I've had over the past 18 years, right? I've been calling and touching base, making sure everybody's doing okay. And I'm starting to hear a lot of concerns from my clients about being out of work, being furloughed, temporarily out of work, and that mortgage payment is still looming over their head. And they're asking me, should I pay the mortgage? Should I not pay the mortgage? Which I certainly am not in a position to answer that question. And I always defer them to their attorney, of course, on how to handle loss of income in regards to that. So I would love it if you could shed some light on what's going on right now in the mortgage market and give advice to those people who have the same concerns.
Okay. And everything's different today than it was just even 2 months ago. Normally, I advise my clients, if you can pay your mortgage, to pay your mortgage.
Right.
I go through a whole prioritizing scenario with them. You have to live, so you have to buy food. You have to, pay your utilities. You have to pay your insurances. But the next thing is your mortgage. If you don't pay the credit card companies, let them yell and scream all they want, but you must pay your mortgage if you're able to. Now, today's a little bit different because since so many people are out of work, beyond their control, there are businesses that are ordered shut down by the state and the government. Okay, so they're just not allowed to legally open their doors and earn money. Because of that, there are some programs in place, new programs, which I'll get to in a little bit, but I'd like to direct everybody's attention to a number of programs that are available, whether you're in that situation or not.
Right, and I just to interrupt you for 2 seconds,
Yes.
all the programs that you're going to talk about on the replay of this, I'm going to have all the links. You've provided me with all the links, so if people need
Yes.
further information, they'll be attached to this video and they can get further information. So that
Excellent.
people don't have to
Yes.
furiously write things down. I will provide the information. Go ahead. Sorry.
Well, one of the programs is through CHAFA, the Connecticut Housing Finance Authority. You're going to hear a lot of initials here. They have a program called the Emergency Mortgage Assistance Program, or EMAP, for Emergency Mortgage Assistance. Now, this has been around for many years now, since the crisis originally hit with mortgages back in 2008 or 9. They've had this. This is a program where if you go behind on your mortgage or are in foreclosure, and they've expanded it to include not just mortgage payments, but past due taxes or common charges and things like that, but only if you also have a mortgage on the property. If you go past due, they will pay the money to bring your mortgage current, okay? It's a loan. You have to pay it back over 30 years. It's a 30-year fixed rate loan. It's low interest rates. It's easy payments. You don't have to immediately start repaying it. CHAFA will determine when you have the ability to start repaying that loan. Another benefit of this emergency mortgage assistance program is that if you have enough money to make some payment on your mortgage, but you can't pay it 100%, they can also, if you qualify, help you make that mortgage payment. They can subsidize it, pay what you can't afford to pay towards it for up to 60 months. So they can help get you current, and it will help keep you current for up to 60 months if you qualify. Now, that's one of the links that you will
Yeah.
see,
Now, these are
and you can
people
access that. Go ahead.
who got a CHFA loan when they purchased their home.
Doesn't matter if it's a CHFA loan. This is like a second mortgage to bring the loan current. It applies to any mortgage.
Awesome. Thanks for clarifying that. Okay.
That's one of the programs. Now, CHFA also has financial resources, both foreclosure prevention and financial resources to help you, or financial planning resources. I volunteered for 7 years at something called the Housing Development Fund in Bridgeport, and they had a foreclosure prevention program. And we would meet once a month with homeowners who are in foreclosure and never been through this before, and we would help them get through that process. They offer counseling both on your finances. They will work and negotiate with your mortgage company to help try to resolve and find some kind of a settlement to keep you in the house. So they have a variety of resources. Now they're using, locally, it would be the Bridgeport Neighborhood Trust is who they're using.
Right.
And, but they go beyond that also, because part of their goal is to keep people in their homes, keep people paying their mortgage. And so they also offer, if you're in the same situation, job training and financial counseling and placement. After they train you, they will try to place you into employment. If now you're unemployed and your business may not come back, whoever you work for or your industry may not be able to survive this, they can retrain you into something that is going to be relevant after this crisis is over.
Right.
And help place you. And they also offer financial fitness classes and things such as that nature. So they're able to help you
kind of get back on your feet.
Back on your feet first, to negotiate with the banks, get your budget in order, negotiate with the banks, keep your home, and then find a way to keep you employed and have money coming in.
What about people with fixed incomes, like the elderlies, people who are 70 plus who can't go into the workforce, but they were on fixed incomes but they're like, what do they do?
There's a number of things they can do. I'm going to tell you about one that deals with people who are 70 years old and older in just a second. That, again, CHFA, that Connecticut Housing Finance Authority, helps. But it's not just for anybody who's elderly or on fixed income or disabled on fixed income. You could try to negotiate and work with your mortgage lenders. You can request mortgage modifications, try to get the interest rates down, try to extend the terms, reduce the payments. We're going to get into the CARES program, the new bill that was just passed a couple of weeks ago, and the help that it'll give to everybody, not just the elderly.
Okay, great.
But the CHFA has a program for people who are 70 years and older, if they are disabled and or have long-term health concerns and health needs. And it's they call it a reverse annuity mortgage, or they refer to it as RAM. They always want to put everything into an initials. But they will basically, it's a mortgage that you put on the house, that they put on the house, and they will pay you an income during this time that you need the help. That you can use it for in-home care, you can use it for out-of-home care, you can use it for medical bills, to cover all kinds of needs. But the kicker here is it has to be somebody who has long-term health care needs or is disabled and over
They
70
need to have
years old.
equity in the home in order to
Yes, they have to have
the home to pay for those current needs.
Correct. And in fact, I think you actually have to have, they'll give you 70% of the appraised value is what the money they'll lend you. Now, they don't give you the 70%. They're going to make monthly payments to you. It's like you're going to have an income from it. They will give you some upfront money, I think $5,000 to $25,000 if there are some liens on your home or to clean up the taxes. But basically, you almost have to have the home mortgage free and for that to work.
Gotcha. Okay.
Then, and there'll be a link to that site as well.
All right.
There's also the Department of Banking is one of the links you'll find, and it gives information about help you can get through the CARES Act, through this bill that has recently passed. If you have a federally backed mortgage, a Fannie Mae, a Freddie Mac, or an FHA mortgage, there is a mortgage forbearance. I believe it's 180 days with the ability to extend that mortgage forbearance for an additional 180 days if the reason you're unable to pay the mortgage is due to the COVID-19 crisis.
Right.
There are moratoriums, 60-day moratorium on foreclosure, so they're not going to start foreclosures at least for the 60 days. If you get the forbearance, they're not going to start a foreclosure because you're in a forbearance also. So that extends, that's even like a longer moratorium in a sense. Now, these are for the federally backed mortgages. The benefit, the real benefit of this is they are not allowed to report anything negative on your credit. They have to report you as current during this forbearance period. So it will not impact the credit.
Would you say, was the percentage of federally backed mortgages about 80% of people
I think
have?
it's over. Now, most of them, it might be 90% or more are federally backed. And people don't know because
a Fannie, Freddie, or an FHA.
Right. And just because you don't write your check each month to Fannie Mae or Freddie Mac or FHA or something, you're probably dealing with what they call a servicer. Unless you have a local bank that they call a portfolio mortgage that owns and holds the mortgage themselves. The real investors, the real owners of these mortgages normally don't process their payments. You're paying somebody else a different name, but they're not the owner of the mortgage. So you may have, and most people are surprised to find out that it is a Fannie Mae or a Freddie Mac mortgage.
Right. So most of us are covered, so that's good news.
Right. So most of us are covered. However, Connecticut has also negotiated an agreement with 50 local banks and credit unions that are for federally backed loans. And they are also agreeing to a moratorium. I believe it's a 90-day relief for the moment. They're not charging fees or penalties or anything like that. Again, these programs will not impact your credit negatively whatsoever. Now, if you have past due amounts being reported currently, I think those will continue to be reported, but they're not going to report any additional past due payments. And if you bring it current, then they have to report you as current across the board also.
So these types of banks, just for clarity, these are like your Newtown Savings Bank mortgages, Danbury Savings Bank, Sikorsky Credit Union, those types.
Yes, and if you click on the link and look at the Department of Banking link that you will get there, they have a list of all of the banks and the credit unions, and hopefully there's more that are continue to cooperate, but you do have a list of them there, and you can call your bank and ask your bank if they're cooperating with it. This is an important thing. The banks aren't going to do this for you automatically. You have to call and you have to ask for the help.
Absolutely.
So don't just sit there and think I won't pay my mortgage because there's a 180-day forbearance. There isn't until you ask for it.
Right.
And same with your credit cards.
Clarify for me, forbearance is not forgiveness. If you could just kind of clarify that, because it's very, very important for people to understand.
Forbearance means that you don't have to make your payments for a period of time. And you still owe that money. They'll most likely just get added to the back of the mortgage in the case like this. So eventually it'll get paid, but it's gives you the ability to get from today where you've been unemployed because of this, or you can't open your beauty parlor or your salon, and to when you can start earning money again. It gets you from now to then, and there's no real negative ramification to you for this grace period.
Perfect. All right.
Now, I also want to point out that it's important for you to do the same thing for your credit cards. Most credit card companies will give you some kind of forbearance or reduced payment of some kind, but they're not going to just do it. You have to call and you have to ask for this.
You have to advocate for yourself.
Exactly.
Yeah. And I know in one of my previous calls, one of the things we discussed was really delineating every single expense you have, cutting out the non-essentials, and then renegotiating what's left.
Right, absolutely.
The less money out of your pocket right now, when things are so uncertain, better to be in your bank account than someone else's.
Correct. And if your problem is you can't make a full mortgage payment, say you can pay half of it or something.
Right.
I always ask my clients, if possible, to put that half aside, to save it. Don't pretend you're making a half a payment every month. The bank probably won't take the half a payment, but you should try to save that. It's going to help in so many different ways once you do get back to making your payments regularly. That's important also.
Okay. And I have another question. I actually have a few of my clients who are in foreclosure. What happens now with their cases during this time?
again, foreclosure, the courts are not open for business as usual. There's certain what they call priority one cases that they're hearing, and those don't involve any kind of regular, normal civil collection foreclosure type matters. It has nothing to do with that. So they're not being heard. They're not being moved forward at this time. If you have deadlines to meet with filing papers, you need to continue to try to meet those deadlines, filing papers. Keep all of your financial documents in order. Most people who are in foreclosure are going to go through the mediation process, at least if it's their personal residence. If it's an income property, you don't qualify for mediation.
Right.
But keep all those papers. And again, keep making, if you were not able to make a payment, but now you could, but you're in foreclosure because you didn't before, again, make that mortgage payment to yourself every month. Put it in a fireproof box of some kind and save it, because it can help you to complete the negotiation to modify your mortgage or to keep your home.
Right. Okay. Great. So there's like a pause button of anything that was currently in process. There's a pause button. So any law dates or that they're kind of suspended right now. Is that my understanding?
Yeah, I do believe, yes. Well, they can't issue any new law dates. And I believe the governor's in his bill has basically extended or paused all statutory dates, statutes of limitations, law dates, sale dates. And they can't have sales. You're not allowed to even do a sale anymore right now out on somebody's, driveway.
Right.
So yes, everything's paused for the moment. Plus you have these moratoriums on mortgage foreclosures at the minute as well.
Okay. So in the replay, I trust that people are going to have so many questions. Can they contact you, and what's the best way to reach you?
They can contact me. My phone number, I'll give you my cell phone number. I don't care. I do publish it and use it because people that I help have immediate and emergency needs. It's 203-526-6119. There's a lot of information on our website also, which is www.bbesq.com, like boy, ESQ short for Esquire.com. A lot of information and articles there. But most importantly is the sooner, even if you haven't missed a mortgage payment yet and you're going to next month, or you're afraid you might next month, this is the time to start planning. The sooner you do, the more options and opportunities and you're going to have available to you.
Right. Information is power.
Yes. There is one more link that's going to be, I hope, published there. That's an interesting thing. And this involves people who want to keep their home, but all other possibilities are really not available to them for one reason or another. And that's to do a short sale. Under normal circumstances, if you do a short sale, you're not allowed to stay in the home. You can't even rent the home back from the person who bought it if you found an investor to buy your home, and you have to give it up completely. There's one program that has changed that, and there's a nonprofit organization out of Boston. It's available in a handful of states right now. Connecticut is one of the states. They will buy the home from you. You have to pre-qualify with a mortgage for them, but they will buy the home from you in a short sale. They'll do all the negotiating with the bank for the short sale. So they're going to buy it at today's market value. If you're underwater, this is a big deal. They're buying it at the market value. And at that same closing table, they will sell it back to you. They found some kind of an exemption for them and how they operate. And they will sell it right back to you at fair market value. So not only do you get to keep the house, but you get a reduction basically in your principal balance because you're getting it at fair market value. You're
rebuying your house for the current market value and getting the difference.
There is a bit of a share. There's you should call me or call them to get the details, because there is some kind of a little shared equity at some point where they get like a tiny percentage of, so they don't want people doing this and then selling it, and getting.
Right. Not everybody who does a short sale is forgiven the difference. It doesn't always work that way either. So there's probably a lot of loopholes, a lot of caveats to this program, I'm sure.
Right, and this would help if in another scenario, a bank allowed you to do a short sale, but they didn't forgive the balance due. Your only other option would be, if you qualify, to file for bankruptcy to be free of that debt. In this case, you wouldn't have to.
Okay.
There's a lot of programs out there. There's a lot.
What is the name of that program that you just mentioned?
It's called Blue Hub Sun. Blue Hub, HUB, one word, Sun, and it's a program that's from a nonprofit in, I think that's called Blue Hub is the nonprofit, and Sun is the program out of Boston.
Okay, perfect. All right. Well, thank you for sharing all that awesome information. I'm sure it'll be extremely helpful to the residents of our town and beyond. And, if anybody needs your help, now they know where they can find you. So that's awesome. So thanks again, Ron. I really appreciate it.
Thank you very much, Danielle.
All right. And all the links that Ron has mentioned will be on the replay. So make sure you check them out. Have a great day.
Thanks.